Hey, had a fantastic Thanksgiving. I spent a lot of time with some family members in California and took some nephews to support for the style. I didn't want them to go through the 7 years of pain that I went through until I got my lesson. So I wanted to speed that up a little bit and not have them wait 7 years falling down the mountain like I did. Anyway, today we're going to be walking through you guys through the potential continued improvement with mortgage rates specifically, and kind of seeing what the next trend is going down the line, and what dates to kind of keep an eye on when it comes to seeing mortgage rates improve, and especially what's going to happen in the first half of 2023. So before we get started, get right into our dad joke. Dad joke today is, what do you call a snake wearing a hard hat? A snake wearing a hard hat. A boa constructor. A boa constructor. Alrighty, so getting right into it. What has happened in the last month on November 10th and throughout this rest of this month and going into next month and January and the rest of these months? What are you supposed to expect when it comes to these mortgage rates potentially turning? There's a bunch of reports out there that people are saying, mortgage rates are going to hit 10%, 9%. I'm like, why? Now, to be clear, we did not expect mortgage rates to go past 7. We didn't expect that. And most of that was pushed through because of Europe. We can blame Europe for that. However, going to the next part of this, season, this transition, how I feel is the next transition. How I feel is going to be a plateau, a peak, things like that, is this week is going to have another report, something called inflation report comes out called PCE. Again, there's a couple of types of, there's a number of, but there's about 3 different types of major inflation reports that we go off of: CPI, core, and PCE. Now, the thing is, all these different types of readings extrapolate data from specific things. They don't analyze the same things, but they look at different things. Some look at rent, some look at gas prices, some look at food and energy prices, so on and so forth, right? Now, the report that's come out this week is PCE, and we're very hopeful, very, very hopeful that when that comes out, it's going to improve mortgage rates even further. Now, and then December 10th, the big inflation report that the Fed goes off of, that will come out on December 10th. Now, why do these things have an impact of mortgage rates? So this is how it works. A lot of people think mortgage rates are controlled by the Fed. They're not controlled by the Fed. They can be influenced, but they're not controlled by the Fed at all. They're completely separate things. Now, when investors who have all this money, mutual fund, hedge investors, they're spending billions and millions of dollars, millions and billions of dollars to make sure that their company makes money, and the dividends that they make also are the dividends that you make, right? Off the bank account, savings account, mutual brokerage accounts, things like that. As they feel that the economy is getting worse, that they no longer will continue making off these long-term stocks that they're buying, right? Well, because if they see inflation goes down, they know that stock prices will start to go down, right? So they'll start to cash out now. Once they start to cash out now, guess what? They can't just leave that money sitting there. They have to put it somewhere else to continuously make money. So what they'll do is they'll buy what's called treasury bonds and mortgage-backed securities. Buying mortgage-backed securities, these hedge funds investors, mutual fund, whatever, right? All these big money people like JP Morgan Chase, people like that. They'll start buying mortgage-backed securities because they'll put their money in a safer place where it still will continue growth. However, as they continue to buy these mortgage-backed securities, mortgage rates actually improve, which is really exciting. So that's exactly what happened on November 10th. Inflation improved by 0.5% across all levels. So they feel like because of that, if inflation is going down, stock prices will come down. It's as simple as that. And then they transfer their money to buy mortgage-backed securities. So it's essentially what's happening on November 10th. We're expecting something like that to happen this week and on December 10th and January 10th as well. The reason why we're looking at November, December, and January with such scrutiny is because these months, if they showed that trend of inflation coming down, it's very promising to see that mortgage rates will hit 5% in the first half of next year. We're not sure when, but we do feel like that's going to happen. Now, the Fed is talking about raising the Fed funds rate more, blah, blah, blah. But for the most part, the big overall consensus is that they're going to reduce how much they're going to raise the Fed funds rate by. now that they're seeing inflation curve. So instead of doing 0.5 every single time, they're going to do 0.25 every single time or something like that as they continue to get these inflation reports coming down, coming down, coming down. Personally, I think they should stop. I think they've made plenty of adjustments. I think they made plenty of rises in the Fed rate. I think they need to give it about another 6 months, keep everything stable, and then see what happens. But the Fed themselves have already admitted that they don't know how inflation works. So, which is really awkward because that's effectively their only job is to make sure inflation doesn't get out of control. So this is kind of makes sense of why we're here, why we are where we are. So, but let's kind of show you guys the charts and kind of get an idea of visually what that all means. So, if you guys know, November 10th was this marker right here. That's when mortgage rates improved quite a bit. So again, inflation report is reduced by 0.5. Mortgage rates basically drastically improved. Now, over time, things have happened, and mortgage rates, for the most part, some of them plateaued, but they mostly kind of went up a little bit, kind of back to where they were. But for the most part, it's kind of peaked almost at this 8% for conventional, 7.5% for VA and FHA. So we're starting to see the improvement, but that we hope to see, and it's starting to track with what has happened. So all other else, again, this week and December 10th are going to be huge markers and dates that you want to keep an eye on to make sure that we're still on that track to see mortgage rates improve. Anyway, that's all I got for you guys. If you guys want to see the other videos, as well as the VA Fridays, some of the HomeBot videos, and some other videos in the YouTube series that I'm working on, please check out my Nuke Notes YouTube channel where you can actually access all the video libraries. I would make a note that if you want to check out the Market Mondays and VA Fridays, either look at the playlist or look at the live section for the videos, because these all videos are live. So check those out, kind of look at the past videos, kind of look at the VA Fridays to kind of learn more about VA home loans, and some other videos that I'm working on that if you want to be a part of, let me know. I'm actually going to be looking to make a push to bring on other people into this video process as well, to kind of have them give us our input and just provide value to our audience and things like that. So if you're interested in being on video, please let me know. I'd love to have extra people and have their insights on this and kind of go from there. Anyways, again, YouTube channel. That's all I got. Nuke out.